Welcome to the Executive Forum at Purdue University's Daniels School of Business. I'm your host, Dave Randich, lecturer in the Strategic Management Department. Each episode, we invite accomplished executives and thought leaders to share their experiences, from building careers and navigating change to taking risks and shaping the future of business. Today's guest is Darrick Weeks, President and Chief Executive Officer of Purdue Federal Credit Union, the member-owned financial cooperative serving Purdue University and the surrounding communities from its headquarters in West Lafayette, Indiana. Bringing more than 3 decades of experience in the financial services industry, Darrick now leads Purdue Federal's strategy as it supports more than 100,000 members with banking, lending, and financial wellness solutions. Darrick is a mission-driven leader, balancing growth, member value, technology transformation, and talent development in a rapidly changing marketplace. Join us as we connect today's students with the insights and inspiration that drive tomorrow's leaders. Darrick, welcome.
Well, thank you, Dave. It's great to be here.
So how long have you been part of the community?
Well, my wife Kay and I moved here officially in April of last year. I started the job in January. But really since January of last year, so we're still brand new and learning a lot of the great things that West Lafayette has to offer. And but what a welcoming experience that it's been.
Yeah, well, welcome here. And why don't we start by let's hear about the Purdue Credit Union. And by the way, what's a credit union? Just maybe set the table for us.
Yeah, you bet. So Purdue Federal Credit Union's been around since 1969. Was actually founded by employees here at Purdue. Originally, it was founded to serve the employees of Purdue, but over the years has evolved to serve students, alumni, and now also the communities here surrounding Purdue. So we do commercial lending and stuff like that as well, so not just consumer-based provider. A little bit about Purdue Federal Credit Union. We're about $2.1 billion in assets, about $125 million or so in revenue. We've got 14 locations, mostly here in Lafayette, although we've got 2 in the northwest part of the state. And a couple of the locations here are in high schools and one on the campus at Ivy Tech. We've got 2 locations here on campus, both in the Union as well as here on Northwestern. We're a full-service financial provider, as I mentioned earlier. We do consumer business, mortgage, commercial, retirement planning. We do just about everything you could think of that a bank could do, but I'd like to say we do it better. A little bit about credit unions. If you're not familiar with what credit unions are, we are member-owned cooperatives. So if you think about our customers, we call them members, they are our owners. So the primary difference is structurally how we are capitalized and run. We are run by a volunteer board of directors that are elected from our membership base, our current members. And again, we're run for the benefit of our members, not shareholders. So that is a key difference. We are tax exempt, and we're able to apply that tax exemption status to ensure that our members can keep more of their hard-earned money. So at its core, that is one of the differences between credit unions and banks.
A tax exempt.
Tax exempt.
Okay.
Yep, we're not for profit. Not for charity, not for profit. You know, we're still a financial institution, so we have all the rules and regs and requirements that a bank would have. We have the same insurance, although through a different agency. Banks are insured by the Federal Deposit Insurance Corporation, called the FDIC. Credit unions are insured by the National Credit Union Administration. Again, all are full faith backed by the United States government.
So if I have an account at your credit union, I'm a member.
You are a member, which means you're an owner.
And I think you mentioned you get voting rights and so on?
Yep, our members would elect our board of directors if we voted to change our name or merge. Those are all things that would be required to go to vote to our membership.
And tax exempt.
Yes, sir.
That's a pretty good advertisement right there.
That's pretty great.
I think it's pretty good right there.
It is.
So how does a guy get to be a CEO of a big organization like this? How did you get there?
Oh, wow. Well, let me start a little bit, talk about family. Family is very important to me. In fact, my son's back here. Jordan, wave hi. I just embarrassed him. My wife Kay and I have been married. We celebrated our 26th wedding anniversary earlier this year. We've got 3 kids. Our oldest, Riley, just finished with her digital media degree from Tiffin University, which is in Northern Ohio. Our daughter Addison is at Carthage College. She's an engineering major. She's a junior trying to transfer here to Purdue. And then Jordan, of course, is a freshman at Miami University in Oxford, Ohio. So that's a little bit about me family-wise. You talked about my education. I did get my bachelor's degree in business administration. My concentration was finance. And then years later, went back to school to get my master's in information technology, which I tell my technology teams means I know enough to be dangerous. But career-wise, I started this business back in high school. I'll start with early on in my life. My parents got divorced when I was in my early teens. I was 13, 14, and they filed bankruptcy. And I remember just that stress and strain and what it did to my family and what I could see the stress and strain of my parents. And I vowed to myself that I didn't want to ever have to go through that. So I committed that I was going to learn the most I could about finances so that I wouldn't have to ever do that. And in high school, a friend of mine's mom worked for a bank, and she hired me to be a teller. So I've done everything from teller to president and CEO. Wow. But she hired me as a teller, and I thought I'd do that while I was going to college. And I did. I worked full-time. I went to school full-time. And I learned that I really enjoyed teaching people about finances so they didn't have to go through what my parents went through. And so what ended up for me being a first job to just pass the time and make a little money while I was in college ended up being a career. I've held positions from teller to president, CEO. I was a CEO in my early 30s of a very small credit union, 5 locations, about 50 employees. I've been a vice president of lending, chief administrative officer, chief information officer, chief operating officer, to president and CEO, my last 2 jobs here over the last 4 years. So I guess I just kind of fell into it, I guess.
Did you find yourself performing and floating to the top?
Yeah, what's interesting, I was talking to some of the students earlier today. Earlier in my career, I was very focused on results and did get a lot of results, probably because I hired some really great people. I have a little bit of a knack for that. But what I learned about 10 years ago, my stepmom, so my dad had remarried. Jordan, you never knew Kathy really, you were young, but he remarried a lady, her name was Kathy. She became a second mom to me. And what Kathy was great at was just caring about people. And she was also a very successful businesswoman. So as I was growing up, I kind of learned from her to see, I really admired what she was doing. But when she got sick, she died from cancer about 10 years ago. And I remember we were with her and my dad. They lived out in California. My dad's still out there. And I was up in their bay window looking down. Jordan was out back with my wife and my dad and his sisters. And Kathy was talking to me, and what she said was, she said, you know, Darrick, your dad and I are very proud of you. We're proud of all the things you've done, but one thing's always kind of bothered me a little bit, and I wanted to give you some advice. I said, well, what's that? Of course, this is somebody I greatly respected. And she said, you know, you always talk about the results. And she said, I'd really encourage you to think about people and the impact you have on people, because that's what great leaders do. If you want to go from good to great, that's what you need to do. And so I've worked really hard over the last 10 years to really try and craft more of a servant leadership philosophy. I wouldn't say I'm perfect with it, but I think I'm hopefully a better father and husband and person because of it. But that's kind of how I grew into being a leader.
And so you really exposed your values there, and one of them is around helping people with their financial security. And in the United States, there's a sobering number of people who really don't know how to manage money, even if they have it.
Yeah.
I mean, you can be economically disadvantaged, but you can also have money and not know how to handle it.
Yeah.
What kind of approaches do you take with your organization and with your members to help with that?
Yeah, you bet. We've talked a little bit about that today through some of the meetings we've had, but we take an education first approach. So one of the things I loved about Purdue Federal as I was interviewing for the job was the commitment that our board and our team has to financial health and wellness. And the approach is really from an education perspective, but also from providing people with tools to make better financial decisions and have better relationship with their money. If you think about, you talked about, I've got a few stats here. This is a Fed survey. This was from me a few years back, probably 6 years ago or so. But I was shocked, and you probably might be too. Over 40% of consumers cannot come up with $400 without selling something or taking a loan. Think about that for a second. That's over 1 in 3 people.
And that may seem familiar to students, but we're talking about everybody.
This is everybody. This was a nationwide data. Over 50% of people 35 and under hadn't even started saving for retirement. And so as you think about the financial stress that not only young people are on, but I'd say many in society, it's a real problem. And so our approach has been, again, educational, but also trying to ensure that people have tools to make good financial decisions.
And so for all of us to be thinking, hey, how do I avoid financial problems in the future?
Yeah.
What are the typical roadblocks that young people have? Is it not understanding the math? Is it not caring, a lack of awareness? What are the kinds of things we have to overcome?
This isn't a young person thing. I think this is everybody. My parents went through this too. One of the things I learned through them was spend within your means. Emergency, these are the basics, but many people don't do them well. Yeah. Don't spend more than you make. Credit should be used. There's good credit and bad credit. I'm a huge Dave Ramsey fan, so I got to give credit to where credit is due, but there's good credit. And
who's Dave Ramsey?
You know Dave Ramsey? He's a financial guru podcast person, okay. But he's been talking financial health and wellness for decades. Yeah. He does, I think, still does podcast, or at least he used to, so it might be somebody good for you to check out. But he talks a lot about good and bad debt. Good debt being a student loan, for example, to get an education, mortgage to buy a home. And he'd say sometimes a car loan, but not always within reason. But beyond that, credit
a Toyota,
card debt,
simple car, right?
Yeah, simple car and spend within your means. But emergency savings account, always save 3 to 6 months of living expense, because when something goes wrong, and inevitably things do go wrong in life, it's just part of life, it's sure nice to have that. Gives you a little bit of financial flexibility and freedom. But I think those are some of the core tenets that I've seen people, my parents included, back when I was young, who just lived outside of their means. And they didn't have great examples in their parents. And so I think that a lot of education can go a long ways, as long as you apply that education.
So Darrick, how do you feel about credit card debt?
I preach to my kids, credit cards are great for convenience. Pay it off every single month. It's great to have for convenience. You need a credit card or a debit card to do just about anything these days. Rent a car, get a hotel, whatever it might be. But I would avoid it like the plague. Same with payday lending. Those are spirals that I've just seen throughout my career. People cannot get out of. Once you get in, it's very hard to get out.
Hard to get out of credit card debt.
Credit card debt, yeah, or payday lending habits. Mm-hmm.
So let's get to running a financial institution as the CEO, right? There's got to be some pressure associated with that, sure, and some prioritization and trade-offs. And there's always stuff going on in the news. We look at the Wall Street Journal. Yeah. What's going on out there? What are the top 3 or 4 things you're looking at that you're using to steer the ship?
Yeah, and here's what I'll say, and we talk about this with our teams all the time. So the news and what's going on currently does not change our mission. We're here to be the trusted financial partner for our members for life. But what it does do is exactly what you said. It informs our priorities. So some of the things we're talking about and that are key right now for us in our world, probably even somewhat in your worlds too, is persistent inflation and interest rates. Interest rate movement for financial institutions is not a bad thing. Interest rates go up and down. What's really hard for financial organizations is when rates go up fast or down fast. And if you think about the environment we've been in over the last, let's say, 5 years, we had an incredibly low rate environment. And then what happened? Rates went up 5% in the course of about a year. Unheard of throughout my career. So there's pressures from an interest rate risk perspective that we've got to be aware of. And I would say along those same lines, consumer financial pressures, especially young folks, because of inflation and some of the cost of living and affordability issues. I think those are very real. And those are things that we talk a lot about, in that how do we ensure we can give our members a leg up? How do we ensure we can make sure our members keep more of their hard-earned money so they can use it for their benefit? AI is huge, probably not surprisingly. I would say it's moving from hype to real transformation. I tell our teams all the time, I think AI is a game changer if we use it right. And where we're trying to really focus on it is to better our experience for our members, trying to utilize it to help our teams be more productive so that they can provide value-add services for our members and help people more financially. But AI is here to stay. I think the winners will be folks who can deploy it across the enterprise and integrate it well into things that they do. I had a friend of Jordan's actually asked me to talk a little bit about their career. They were thinking about majoring, and they said, is AI going to take my job? And I said, AI is probably not going to take your job, but people who know AI will. And so I would encourage you to get to know that. That's something we are really trying to educate our teams on, how to use it, how not to use it. It's not the end all be all, but it certainly is a great tool. And two more things I'd have for you is payments is something that is top of mind for all financial institutions. It's very fragmented today if you think about the ways we move money. Very fragmented, and what will stablecoins do to us? Is that disruptive enough from the deposit side of the house that is something we have to pay attention to? We believe yes. The question will be how fast and how much does it scale and how quickly, and I think adoption. So those are, and then I'd say the final would be rising fraud is huge in all financial institutions. We're in a position of trust. We hold people's money. So staying safe and secure is very important to us. And as technology and AI and everything expands, that becomes harder and harder, but something we pay a lot of attention to.
Do you see AI as a potential defense against fraud?
For sure. Yeah, for sure. And we do use it that way.
So it can be an accelerator and a defense as well, right?
Yeah, technology can have good uses and bad uses, always, right? And so, yeah, absolutely, it's a way we can utilize and do utilize AI.
So Darrick, let's talk about your values around managing people. You talk about how you've got three constituents you're really managing, and it reflects your values and the values of your organization. And maybe kind of something you learned from your stepmother, right, about caring for people. So maybe you could share that with us.
Yeah, really, I talk about probably three things here. One is I talked a little bit about why I chose financial services. My parents going through divorce and bankruptcy. But that also touches everything we do in life. Not everything revolves around money, but it impacts everything we do. And so early on, going through that and then learning the power of money and how I could use it to my advantage if I was smart about it. So that informed a core of who I am. That was my why, my parents. My three stakeholder model is what you're talking about. Actually learned that from a leader I worked for at Right Pat Credit Union, a guy named Doug Fecker. Started there about 15 years ago as Chief Operating Officer. He was our CEO. And he would always talk about our three stakeholder model, and I came to love it, and now it's something that I hold true and core to who I am. And that it's really simple. It's easy to say, but it's hard to do. But from a business perspective, we focus on ensuring we treat our employees better than anybody else can or will. Our employees then in turn will treat our members or our customers better than anybody else can or will. And of course our members, our customers will treat us right by bringing us more of their hard-earned money. And so when that happens, we create this win-win-win circle, and we focus a lot on that at Purdue Federal to ensure that we are very healthy and balanced there. Balancing it can be hard, but it's something we focus a lot on. And then last but certainly not least, we talked about financial health and wellness. That's something we do not only organizationally, but it's something I enjoy doing a lot personally. Probably drove my kids nuts growing up, but I hope that I taught them some good financial lessons.
Well, managing people is a key to success, and you talk about treating your people better than anybody else can. What does that actually mean in 2026? What kind of actions are required?
I think what we focus on is ensuring that we've got a great environment for our employees to work in. It's a safe environment. We're a steady organization. We are slow to hire, and the reason is I take very seriously that 310 people work for us, and if I make bad decisions and they can't have a job here, that's on me. So we're very thoughtful about the investments we make and where we make them. That's not to say we're not innovative and we don't do innovative things. We do, but we're just very careful and very good stewards of the balance sheet that we're entrusted with of our members' money. But creating a safe environment for employees to be their true selves, to come to work and have a safe place to be and hopefully enjoy the people they work with. We've got a great environment of asking our teams to help and determine the direction we go, to help determine the things we do. We're a very inclusive organization in that regard. And then, of course, financially, we try to pay our people well and look at the full balanced equation of what makes a good employer. So we're not perfect with it. I'll be the first to tell you that, but I think we're pretty darn good.
And if it's not going well, how do you know? As a CEO?
Our employees tell us, which is great. We do a couple of things. I'm a big believer in feedback. So we get feedback from multiple areas, but we do an employee engagement survey that we do twice a year, which is our employees telling us how we're doing. We had about almost 90% participation. This last time we did was the first time we did it. That's something I brought new to the organization, which was our employees telling us how we were doing. And we were 75th plus percentile on our results, which was great. But what was even more valuable, we had over 1,500 comments that our employees gave us. I read each and every single one of them, and they gave us great ideas on how we could be even better. And we do that with our members too. We've got a survey program we utilize called Net Promoter Score. Some of you have probably heard of that. Yeah. And that it's a really great way for us to get feedback to hear what's going well and what's not going well. And I get out, I'm a huge believer in management by walking around. I get out and talk to people and ask them how it's going. And when you do that enough, it's really cool. People will actually tell you. So.
And when things aren't going well at your organization, the way you manage, I would think that the things that don't go well are kind of generic. We're going to see these in other places, things that people want. What are some of the things that your employees really want that you're striving to satisfy?
You know, I think sometimes, and this is where the balance comes in, right? Like, everybody wants to work 8 to 5. Our members need us beyond 8 to 5. So we have some shifts that are beyond 8 to 5, and that becomes a struggle, right? We're huge believers. I'm a believer in work-life balance. Again, I'm not perfect with it, but a big believer in it. And so how do we best balance that?
Scheduling, right?
So scheduling can be one of those
Especially when you got childcare and all kind of stuff, right?
Yeah. So we try and we hire folks from various walks of life and various ages, which can help with some of that, right? Students can be flexible sometimes and sometimes not, depending on their schedule. We hire part-time moms who can work at certain times of the day and they can't work at others. So scheduling can be a big issue that things want that people want that we can't always deliver on. That's probably one of the bigger ones. It being in a smaller organization, career advancement can be difficult. I mean, we've got 310 employees, so we're not tiny, but we're also not huge. We're not JP Morgan Chase that has thousands of employees. There's pros and cons to that, right? So our career development for our employees is not always up the career ladder. I know at the end we'll talk a little bit about maybe some advice I have, but you'll hear me talk a lot about when you think about your career, it's not always a ladder. I like to think of careers as a jungle gym. Sometimes the move is over, sometimes it's down, sometimes it's up. But think about your career that way. I think smaller organizations can do that way more effectively than larger ones, so we try and leverage that.
Because you can know your individual employees. And help them.
Yeah, and we can put them in different areas of the organization a lot easier than, say, JP Morgan Chase could.
So Darrick, our students, they ask you, okay, what's one thing you want to leave here that we know about Darrick in terms of your advice on launching out after Purdue? What do you want these students to know?
Wow, if I could pick one thing, I would say don't worry about having everything figured out when you leave school. I'm going through this with our oldest daughter. She's graduated and trying to find the perfect job. And I said, Riley, look, your first job doesn't A, define you, B, is a great learning opportunity, and C, sometimes is not where you end up. And so I guess if I could impress one thing on you, it would be that, is don't feel like you have to leave here having it all figured out. You will leave here with an amazing foundation, with amazing contacts, with amazing education, and a great community with the alumni associate, just the connections you will have will be amazing. But don't feel like you have to have it all figured out.
Darrick, on behalf of Purdue University, the Daniel
Thank
School
you.
of Business, thank you so much for coming.
Thanks for tuning into the Executive Forum. To learn more about how the Daniel School of Business is helping students and organizations shape what's next, visit us at business.purdue.edu. Until next time, keep learning, leading, and building the future of business.